hence the reason why the platinum stocks are running hard today. But Manus is going to give us his highlights of Sibanye Stillwater. Manus, straight over to you, and then to Sean. Thanks.
Thanks, Otto. Thank you, everyone. Welcome to today's call. Today we'll be quickly having a look at the macro environment, the PGM price performance versus gold prices, the PGM miners' relative performance to each other, the PGM sector price drivers, so supply and demand forecast for PGM, that's the big driver at the moment, the tariff effect on PGMs and basically everyone using PGMs, and then Sibanye's recommendation as a whole. We'll dive into the valuation a little bit. We'll quickly have a look at the first quarter for 2025 operating update, the financial results and strategic developments, and then half-year results is expected around 28th of August. Sorry, just 1 second. Yeah, sorry. There you go. So, platinum price, there we can see in May, it made quite a jump. Palladium is slightly a bit more muted. And then rhodium made its spike in February to beginning of March. Sibanye's, if we have a look at the relative commodity performance, gold over last year, that's a standout performer. But platinum is catching up slightly there from May, as mentioned earlier, with palladium and rhodium a little bit more muted over the last 2-3 months. But you can see the rhodium in February jumping. And then iron ore, that's still lagging. And that's mainly due to demand from the Chinese construction industry. That's still a bit in trouble. And that we'll see if it changes, if any developments improve from that end in China. PGM price performance, relative performance for the miners. Implats is the leader. It's doing quite well with Sibanye catching up. So if you look at the goldish brown color line in Feb and September last year, you see that Sibanye was quite lagging. It's done very well. It's caught up to Implats quite a bit. And then you can see the blue line there, that's Valterra, the old Anglo-American Platinum. Still the same company, just renamed. It's now demerged from Anglo-America. And there's a bit of a slight decrease in price, which is mainly due to its demerging, its development in share prices. It's paid a dividend, quite a big dividend and all these things. So we'll see if that can catch up in the next call back to Sibanye and Implats. Sibanye's share price performance relative to its benchmark, the ALSI. You can see here that for the last 5 years, between 2020 and 2022, it's performed quite well. And that's when platinum prices and rhodium prices were much higher. And now it's declined, but it is improving again. And the right-hand chart, the drawdown chart, it's still far behind the previous highs that it achieved. If we just have a look at the supply chart, I just want to show, who's the actual producers or suppliers of platinum. You can see North America is producing or supplying a little bit. That's mainly recycling. Then Russia, they also supply a little bit. But there at the bottom, that purple section, that's South Africa. We produce the most platinum. So tariffs, we'll see what happens with tariffs. If it comes from us, surely if they need it, it can't be tariffs. We'll see what happens. If we look at the supply and demand, and this is what's driving most of the price at the moment. In 2024, your top chart there shows that was supply, 729.3, with an increase in demand, supply from the mining sector. And then in forecast for 2025 is for less supply, and that's, again, mainly due to the mining supply. A big reason for that is mines closing shafts that's unprofitable or very costly to run. You see that in Sibanye's West Stillwater mine. that they put on maintenance and care, and that's just due to it's being unprofitable to run at the moment. Now, as the prices spiked, that might change, but these decisions are mainly long-term decisions made by management. Then your bottom chart there, that's the demand chart. Between 2023 to 2024, the main demand came from jewelry and investments. And then for 2025 years, you'll see that the demand is expected to decline maybe to industrial uses, but that demand is still much higher than supply, which is one of the big reasons that platinum's price has spiked the way it has. And also another big driver is the current dollar index price, the DXY, which is weakened quite a bit, which means buying power in other currencies like China and other countries using platinum. The buying power has increased, which means they can now buy at a cheaper dollar relative price. This chart I just wanted to show, it's North America's recycling chart. You can see their recycling is decline in platinum and palladium. The big driver of this is simply people holding on to their cars a little bit longer. Car sales and total volume spiked and peaked around 2016, 2017, and from there it's declined slightly. But now also although it declined in total, there's also a portion of it that's now EVs that's come through. So that's one of the reasons for this kind of decline, that people are just holding on to their cars a bit longer. If we look at the tariffs, so firstly, what's driving these tariffs? You can see the chart on the left, your above zero line bars, that's light gray. That's exports, so cars exported from the US or from North America in general, and imports, that's your below zero line darker gray bars. And that's just showing that the supply of the demand side in North America is being supplied by foreign cars or imported cars. So that's why these numbers or these tariffs are making such a big impact on the car sales, or will make an impact on car sales. Now, if we look to the right, the tariff effect, what will happen is you will get higher car prices, and that's for both domestically produced and imported cars. So domestically produced cars are a lot of time just put together with parts that are imported from the likes of China in any way, and that part will still have a tariff. So you'll get a higher price, although it's produced locally. So what that means is lower sales in countries where tariffs were raised. So prices of cars will increase, and your guy that used to buy a car every 4 years, a new car, will now only do it every 6 years and hold on to that car a bit longer. Producers will attempt to sell those cars that they still produce and cannot sell in tariff countries in other countries where the tariffs were not raised. And in countries where these tariffs were raised, you get your second-hand car market being a bit more competitive. And that's just because simply, again, the guy that used to replace his car with a new one every 4 years, now every 6 years. So supply declines in the second-hand car market. So the car prices will just simply, second-hand car prices will just remain a bit sticky. So here's actually the winner here of these tariffs. If the sales decline by a percentage that's less than the increase in price due to tariffs, then the government's the winner. And that's simply because the consumer is paying more and producer loses on car sales, but that percentage differential will go to the government. Operating update for the first quarter of 2025, group adjusted EBITDA for Sibanye increased 89% to 4.1 billion rand. Gold operations was a standout performer, which is expected in the current gold price environment that they get. EBITDA increased by 178% to 1.8 billion rand, although the production declined by 15% for the first quarter of 2025 versus the first quarter of 2024. So that's a great achievement. And then South Africa's PGM operations, they benefited from cost-cutting measures, and that came through in EBITDA, boosting it by 74% to 2.5 billion rand. In that segment, also production declined by around 3%. And then US PGM segment production fell by 41%. And that's following the Stillwater West mine that was placed on maintenance and care. That's where you see your supply forecast around the world declining because of these type of things. Their mines close or put mines on care and maintenance due to basically a costly operation that just is not feasible at that low PGM prices. So that's how supply decreased. And this also led during the period for EBITDA that was negative or loss making at 170 million rand for the quarter, and that's compared to a profit that was shown in the first quarter of 2024 of 609 million. Finance costs increased by 8% to 1.2 billion rand. It's quite interesting that it's increasing in a cost-cutting environment, or a finance cost-cutting environment, or where interest costs are coming down. It shows that this is a balance sheet that's increasing and kind of ballooning. Debt is increased quite a bit in this company. They are trying to get these other projects online, which should help in the future. But for now, they've got a lot of debt, and you can see that in the finance cost increasing while there's a rate cutting environment happening. And then other strategic developments is there's two projects that are busy with. That was awarded a strategic project status by the European Commission. This is relevant because they have access to lower debt costs now, a bit of a improved runway or a quicker way to get licensing and get operational in these projects. And then they also have the possible benefit of the S45X credit in the US PGM operations. This is a tax credit kind of, or a cost credit that the Trump administration brought in. And also, it looks like it's going to be what they anticipate the amounts are going to be is about 60 million rand. $60 million for 2025, and also about $120 million for 2023 and 2024. Now, these amounts are expected to come in around the next 3 years or so, but it's still unconfirmed and just an expected amount. So we'll see how that unfolds. So Sibanye's valuation is still a hold. When we did the valuation, it had a downside of 10% with an intrinsic value of 27 Rand per share. We've used the EV/EBITDA to value it with a bear, a bull case, and then a base case or a current case. And then a probability weighting of bear case of 30%, base case of 55%, and a bull case of 15%. Now we compare this to our other valuations or outlook on Implats and Valterra. The bear case is a bit more loaded in this instance, and that's simply just because they do have that gold operations, which is great, but it's a costly operation when you compare it to a pure gold mine like Harmony and Goldfields. And then also they've got the balance sheet that's very high indebted. So we'll see if they can use some of this PGM price benefit to reduce that debt and improve their balance sheet, and this number might change then. So yeah, a weighted intrinsic value of 27. I know Sibanye is up about, I think, 7% today, so that might look a bit different. But that's it from my side. I'm going to hand over to Sean, who will do the technical analysis.
Yeah, good morning, everybody. You can see the chart there of Sibanye. This is a screenshot, obviously, yesterday's close before the market opened today. You see the medium term and the long term trend is still bullish. It's trading above all its moving averages, and it has been trading within what I call a up channel. And then a few days ago, it broke down below that support trend line, and it was testing this lower support of that sideways market. But saying that, everything has changed today. As Sorrel said, the platinum price is running, and Sibanye is up nearly 8.5% today. So it's moved back into that up channel. So yeah, it's still very positive. Although the MACD indicator at the bottom there It is trading in overbought territory, and it is trading below its trigger line. It's a bit, I call it a bit neutral at the moment, but yeah, that's way above our intrinsic value of 27 Rand. A hold recommendation. So yeah, we'll see if it breaks up above that resistance level at the top there and continue up. But at this point in time, it looks very strong. That's how I see it.
Thank you, Sean and Marnus. Guys, if you want to ask questions, please post them in the chat. Otherwise, just switch on your microphones and your cameras, and then we can have a chat about this. There's the first question. Jake says, any update on the 5 billion Rand restart of Burnstone Gold Project in Mpumalanga? Marnus.
No news yet. We'll see in the half-year results if that comes through.
Right. Thank you. Jake, so we don't know yet. We'll keep you updated. Any other questions, guys? Sean, if you just hop back to the chart for me. What's the upper resistance level, please, Sean? Let's check for Frederick Smith there. If you just bring the chart back up, please, Marnus. There we go. Okay, so the upper resistance level was around that top line, but now with today's move, it's broken completely through it. Am I right, Sean? You muted.
Yeah, it's moved above that above that support trend line again. It's in that up channel.
Okay. Now, I don't know if you guys can see my mouse pointer. Can you? Not.
No.
I can see Manus's little hand there. All right. So if you look at the right-hand side of the chart, just below where it says resistance level. Yeah, there. If you you'll see there is a resistance level and a support level. Right? Now I want you to move to sort of the May month part of the chart. You'll see there was a move to the upside to the resistance level, back down to the support level, back up to the resistance level, back down to the support level, twice to each side. Right? So that was a double top. If it did break through that resistance level, but instead it broke through the top part. Right? So then you can basically reverse the width of that channel to determine your target on the upside. So if you flip that channel to the top, that's pretty much the resistance, blue resistance line just before this support line on the right-hand side. So it's hit that target, it's gone up, and now it's made a sideways channel again, and this time broken through it again. So really not a good time to sell this thing yet, even though I think this could probably not be sustained. This platinum price has now made for it to break through. It is lagging the rest. As Marnus has said, Sibanye has caught up quite a bit with just Impala outperforming it on the year. But from a technical point of view, probably not a good time. If it does, for whatever reason, pull back to $30, it's probably still a buy. Just wanted to highlight that for you. So resistance level wise, Mr. Smith, there's nothing. It's blue sky. The resistance was there where Sean's blue line was. So it's probably going to continue for a while yet. I'm going to have a quick look at the longer term chart and see if I can spot any resistance there. Let's see if I call up a 5-year chart maybe. It looks like the first resistance will be around 35.92. And I base it on the fact that there was quite a big support there for quite some time during 2023, which was broken sort of mid-2023 for the stock to start trading lower. So 35.92 is pretty much the next major resistance, Mr. Smith. All right. He says, thanks very much. Right. Any other questions, guys? I don't see any. Sean, do you know what we're covering next week?
Should be Cecil.
Okay, perfect.
I think it's also with Marnus.
Also with Marnus. Okay, great. So we'll be back with Sasol and Marnus next week. Thanks, guys, for joining us. I hope you have a fantastic Thursday. We'll cover Sasol for you next week. Let's keep an eye on these flat stocks. Cheers.
Cheers.
Everyone.